So last time we were talking about the forever model, the one that we are going to be using each and every day. So we talked about time frame alignment, and we were saying if you get your trade in monthly, you're going to get your trade in daily, which they are rarely in the monthly. So we said if you get your trade, you get your trade in weekly, you're going to trade it in 4 hours. But for me, I said I'm going to be checking on the daily time frame. And we said when we take out the external liquidity, we are waiting for the market to retrace back to the fair value gap, and then we take external liquidity. So internal, we move from internal to external, internal to external, external to internal. So this is what has been happening. We took this previous high. If we take previous high, where are we coming back to? We are coming back to fair value gap. We came here, and we are not trading it in daily. So we said if we have a setup in daily, we are going to check it in 1 hour. So when we come here, we expect the same. We want a high to be taken, and then it comes back to the FVG. This did not happen for us. So we are waiting for a high to be taken, and then we come back to the fair value gap. So here we have this high taken. We are coming from the fair value gap for daily, right? So we are waiting for this high to be taken, and then it comes back to the fair value. So we have this fair value gap here. And then we have this one. So you see, we took this high, and then the market retraced to this point, and that is where we take our trade. We buy. So there is something that I wanted to add to this whole thing, and that is EMA. A while ago, I used to hear people say EMA, and I would watch the videos and I will skip so fast because I used to say, oh, those are retail concepts. But one thing that I've come to understand is that this is a secondary market. We are trading against each other. So what psychology is very important. What are people looking at? And I've come to realize collective thinking, that's what moves the market in some way. Because if people are watching the 50 EMA and the 200 EMA, and they have kept, like when the market comes to the 50 or the 200, that is where they are watching. If these EMA are being watched by a lot of people, that means a lot of people are going to react in that area. So let's not label EMAs as, oh, they are retail concept. Most people make money with EMAs, so let's not label them as. It's about collective thinking. So I'm going to use FX220 EMA. Yeah, that is FX220. So we come to the daily, and we can see what is our trend. So we are concentrating on the 50 and the 200 only. I can add the 9 and the 20, but for now, let's look at the 50 and the 200. And I want us to apply it on the daily. And you will see like what is, it gives you the trend. What is the trend that we are dealing with right now? It's a bullish trend. So for you taking sales in gold right now, it's very risky taking a sell. Unless the 50 crosses the 200 in the daily, I don't think you should consider any sales. I wouldn't. Yes, there are sellers that are getting into the market, but those are the days that you just stay out of the market until you see the market coming back to your zone again. Like here, we can see we have this high taken. This is our zone. And that's it. So for taking sales in gold, it is very risky. This market is bullish. So why would we be considering taking sales? It's not like there are no sellers in this market. You can see there are sellers here. We took this high. This was the fair value gap here. This was the place that it could have reacted, you see. So the market broke below this zone. So it's not like there is no sellers in this market. There are sellers in this market. But are we taking sales really? We are not. We are waiting for the market to, we are only trading with the trend. And that is how people say, oh, sometimes I even go weeks without taking trades. It's because you are taking calculated, you're observing. You're being an observer and you're observing. And you're just checking and waiting for the clean setups that you're going to see. So this forever model, I find it so nice. I find it so easy. You're not thinking, you don't have to struggle a lot. If you know the trend, you just come see which have we taken external liquidity? Yes or no? We have taken the external liquidity. Where is the fair value gap? The fair value is here. This is in the daily time frame. I can go to 1 hour. And in 1 hour, we said in 1 hour, this setup in 1 hour, you can observe it in 5 minutes. If you get the setup in 4 hours, you're going to observe it in 15 minutes. So that is very easy. You don't have to think. You don't have to think a lot, and that is the thing that I loved, because most of the time it's the thinking. For me, when you don't know when to buy, when to sell, what you are doing, I think that is the tricky part, and that is what makes us lose money. I was reading a book about it is the Super Trader. That book, in the first page, all the information you need is in that page, because he guides you on how to identify the trend, which is the same way. But he talks about stocks, and I'm currently interested in stocks because I've come to realize, yes, even if the growth is not as much as we see in the Forex market, I'm interested too. So when you get that book, the first pages, he's giving details on how to identify the trends. Yes, it's an old book, but it has some very juicy information. So for me, that is what, practice this, observe it, see it, and because you're going to see a lot of information and you're going to think, oh, these are retail concepts. They are not retail concepts. Practice it. If it is working, it is working. It's about collective thinking. What are we thinking? What are a majority of people thinking? What are they observing? Because we are competing against each other. So that is it for today. Please check it. Identify the trend, not only in gold. This works in all the currencies. Identify the trend. Go to the lower time frame, that is in correlation with the time frame. Maybe if you are in daily, that is 1 hour. If you see a break of structure in 1 hour, then you have a fair value gap and you know the trend is up. Go to 5 minutes and then take sniper entries. You don't have to ride it for long, and then you have just made your money. That is not complicated. We are going to be talking, the next session, I'm going to be talking about the ranges, why people talk about the Asian session, the Monday range. Those are the things that we are going to be talking about next. But this is, if I was to recommend anything, this will be it. So that is it.